afternoon. I am Mr. Wonderful. I am going to attempt to show you today how to quickly evaluate a business at first glance. Keep in mind, I am not a accountant. I am not a CPA, financial advisor, any of that. I'm just someone who's sharing information with you so that you can see a deal and know if the deal is worth your time and effort. Okay, on the screen, you will see we have a profitable audio and security accessory shop with 50,000 in inventory included in New Jersey, right? First glance, asking price is 199, cash flow is 150. Sales revenue, this is the gross revenue, the money that walks in the door is 450. First glance, yes. Let's talk to somebody about this business opportunity. Okay. Cash revenue, the gross revenue, sorry, at 450 means every dollar that walked through the door and is spent in that establishment for the year. The cash flow of 150 is whatever's left over from that 450 is the profit to the business after the business pays all operational expenses, rent, salary, licensing, taxes, accounting, everything. That's what the business is left with as far as profit. So, here in the real quick description, it says they're giving you the FF&E, right? Valued at 100,000. The inventory valued at 50,000. The owner will stay on to ensure a smooth transition. No real estate, okay. Not pre-qualified, don't worry about that. Rent of 1950, really don't care about that because remember, the gross revenue has the rent being deducted from it with all the other operational cost, and that's what you'll get left over. So your rent is paid for out of that 450. The seller is looking to sell because they're relocating out of the area. I already know they moved already. They now live in Florida, from New Jersey to Florida. Good luck with them. Employees, you get two full time, one part time. There's also, I think, three to four per diem employees that come by and do work at the shop as well. They've been around for 34 years. I'm excited just thinking about the banking history and with that 34 years. But let's look deeper, right? So, blah, 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 blah. If you're interested, you would reach out to the broker, Sunbelt of Linden, talk to them, sign their NDA, non disclosure agreement. They will send you over the paperwork to start your vetting process of this business. Hence, tax returns or P&L statements, year-to-date statements. Typically, you want to have 3 to 5 years of tax returns or more. The more, the better, right? Three at least, because if you're going to go SBA, they're going to want to see 3 years. 1 year can be a great year, another year can be an okay year, and then that third year can be another great year. That's why you need three so that you can get a good average of it. When you get the tax returns, the things you want to look out for are what we're going to talk about right now. I redacted the tax returns. We have 2020, 2021, 2022, and 2023. I redacted them to protect the information of the tax return for the individual, the broker, and the business. Right? Again, if you want this information unredacted, reach out to the broker, sign an NDA, and talk to them. The first thing you want to look for is item one, gross receipts of sales, aka gross revenue. 1C gives you the total. So they had $181,000 in gross revenue in 2022. Okay. Cost of goods sold. Cost of goods sold. This is everything it took to either provide the service or the product to be sold, right? So this includes the labor of doing the installs in this scenario. This provides the equipment that they needed to do the installs in this scenario. You subtract on line 3 181 from 122. That's where you get the 59668 from, which is also down here as line 6, your total loss or income. This is showing as income because it's on the positive side. Line 7 goes into all of your deductions, your expenses. Number 7, I'm sorry, 7 through 21, 20 go through that. So let's go through line 7. This is what the officer of the corporation, the LLC, the entity gets. This one got nothing. Salary and wages. This is the salary that you pay your back end staff, your bookkeepers, your HR, your on site IT if you have it, things like that. The back end, not the people doing the work, the installs. Repairs and maintenance. You got a building, your lease, your rent, your mortgage, whatever. This is the repairs and maintenance to that facility. Bad debts. You had $500 in bad debts. Okay, let's talk about it, right? This is where your bad debt listing will go. Your rents. This is what they're paying in rent a year. Remember that 1950 that we saw every month? It comes out as a deduction here. So 19,500. It looked like they're probably getting a discount as well. They're paying 10 months rent and getting 2 months free possible. Don't know. Have to look at the lease agreement. Taxes and interest. Depreciation, depletion. This is where you start depreciating your business assets. Look like they're not depreciating business assets for whatever reason. Advertising. How much money are they spending on their marketing? $245 a year back in 2020. Pension profit sharing, employee benefits program, nothing. Other deductions, see attached statement. Other deductions are 26,289. Total deductions from 7 all the way down to 19, it's $54,910 of deductions. You take that number and you subtract that number 20 from number 6. That is your overall income or loss for the year. According to this tax return of 2020, they made a profit of $4,750 out of $182,000. Let's go down. Okay. Page 4. Okay. Usually right here is very important. The Schedule L. It tells you how much cash was in the business at the beginning. It tells you how much cash was at the end. It tells you all of this documentation down here. Um, let's see. There's nothing. Skip page 5. Your Schedule M. Very, very, very important right here. This number 4, that right there, if they are truthful on this tax return, this number should equal whatever 21 was. This right here tells the banks that wants to give you the loan what is the true profit or loss of the business. They have 0, right? But they have 4,758 on line 21. So let's get them the benefit of the doubt, whoever, right? 4,758 was their income. This tells me only one person or entity owns 100%. Cost of goods, and let's see, right here. Remember I told you 26,289 was other deductions? That's this right here. Your insurance, your office expenses, your supplies, your telephone, your utilities, expenses paid for J&W Sales Incorporated to support the business stay open. Not sure what that meant. Not sure why they got $23,000 for that year. Okay. This is the same as that above. Fine. So keep in mind, $4,758 right here. That's the profit for 2020. 2021, remember, gross is up here. This is the income after you minus the cost of goods. Line 21 is what we're looking for. 2021, they made $38,000. So let's go to Schedule M and see if that number is reflecting that. Schedule M, 38,396. So this is truly what they are claiming on their tax return. Okay? So 4,758, 38,396. 2022, remember, line 1 is always going to be your gross revenue, but line 21 is what we're interested in. They took a loss that year of $7,837. And rent went up as well. So let's check out Schedule M. Negative. Okay. 2023 tax return. Gross revenue is 185,000. Line 21 is 2,344. Out of these 4 years, they only had 1 year where they were over $35,000 in profit. That's not too good. Let's see what Schedule M has to say for this. Still only one owner. Deductions. Again, J&M Sales Incorporated. They're getting about close to 24,000 a year from this business. For what? I'm not sure. Cost of goods, purchases, inventory at the beginning of the year. They started the year with low inventory and they made some purchases. Bank charges, legal, telephone, credit card fees, all normal. All right. So now that we are seeing what the gross revenue is, and we're seeing what the cash flow back into the businesses, let's look at some numbers. Remember, when we looked at this, these numbers made it look like it was a really good deal. If I spent 200,000 within a year and a half, my cash flow should be able to pay that off, and everything from that point would be total profit for me. And if I grow the business even more, so let's say I grow at 100,000, now it's 550. My profit should grow some as well. But let's look at the numbers according to what was provided. Revenue, cash flow. 1, 2, 3, 4. 4-month revenue, a 4-year revenue, right? That gives you about $740,000, so $745,000 over a 4-year period. Where Your cash flow, which is concerning, has been 37,000 over a 4-year period. So you're averaging not even 10,000. Yeah, here it is right here. I put those numbers right there. The calculation happened. You're not even doing 10,000 in profit per year. That is not good. The only way you should be looking at buying this business is if they say, hey, we'll sell it to you for $10,000, $20,000 at the most, right? This is the average over each year that you'll be profitable. I mean, that you'll have cash, gross revenue. This is how much you're profitable per year over 4-year average. This is what this business would be valued at. $28,245.75 based on that number. The asking price is $199,000. That makes this no deal. Again, if you were to buy this business, I would say you come in about 25,000, no higher. Let them talk, let them talk. The highest you go, 28,000. That's with the owner holding a seller's note. I would probably have them hold a seller's note for 14,000, 15,000. Show you have confidence in the business making money by holding a 50% seller's note. No deal. Comments. If you want to buy this at 199, knowing that's going to be your profit every year, you must be out your rabbit ass mind. Any questions? Put them in the comments below. We can talk about it, go over it. If you found value or you found this helpful, put a comment below. Mr. Wonderful. Talk to you later.